What if I told you the entire AI revolution, everything we're seeing, hinges on one critical thing that almost nobody is talking about? We're not talking about chips or software. We're talking about the one company that keeps the whole thing from literally melting down. Today, we're doing a deep dive into Vertiv, that's ticker symbol VRT, to find out why it just might be the undisputed king of AI cooling. Welcome to ValueVest Daily, where we analyze the best value and momentum investment opportunities to help you stay ahead of the curve. So let's just jump right in with a huge question. What is the single biggest physical threat that could stop this incredible AI boom dead in its tracks? It's not regulation, it's not a lack of brainpower, it's something much, much more basic. It's thermal overload, just pure, raw heat. I mean, the sheer energy these new AI chips are burning through is creating an actual crisis. You simply can't power the future of technology if your data centers are turning into ovens. I want you to just think about that for a second. Massive data centers packed wall to wall with thousands of these high-density GPU clusters, all running 24/7 at full tilt. They're basically becoming digital furnaces. And your standard air conditioning? Forget about it. It can't even make a dent. This has created a billion-dollar problem that needs a very specific solution, and it needs it now. And this is exactly where Vertiv steps into the spotlight. You know, if the AI boom is the new gold rush, Vertiv isn't just selling the picks and shovels. No, they are the master plumbers. They're the ones installing the absolutely mission-critical cooling infrastructure that makes the entire gold rush possible in the first place. Okay, so in the world of investing, the real secret sauce, the key to long-term success, is finding a company with a wide competitive moat. Just think of a real moat protecting a castle. It's the same idea. It protects a company's profits and its market share from competitors for years and years to come. So what's Vertiv's moat? Well, as the exclusive plumber, they have these incredibly deep, established relationships with the king of AI chips itself, NVIDIA. This lets them co-design cooling solutions for the next generation of chips before anyone else even sees them. And that creates ridiculously high switching costs. I mean, once a data center is built using Vertiv's integrated systems, it is crazy expensive and complicated to just rip it all out and start over. And this is where their tech gets really, really cool. Literally, Vertiv is a leader in something called direct-to-chip liquid cooling. So instead of trying to cool down a whole room full of hot air, which is super inefficient, their systems pump a special coolant directly onto the GPU itself. The liquid absorbs the heat right at the source, and then it's cycled away to be cooled. It's an elegant and, frankly, an absolutely essential solution for these new powerhouse chips like NVIDIA's Blackwell. And here's the kicker. The results of all that cool tech. We're talking about over 30% gains in energy efficiency. Now, for a massive data center operator, you know, a company like Amazon or Google or Microsoft, a 30% cut in their power bill isn't just nice, it's an absolutely astronomical, game-changing amount of money. So that game-changing efficiency, it's not just a neat piece of engineering, right? It is the rocket fuel for this company's financials. So let's pop the hood on this growth engine and take a look at the powerful numbers behind VRT. All right, first up, let's talk scale. Vertiv is no small player here. They are already a major established company commanding a market cap of $70 billion. And the growth we're seeing is just explosive. Vertiv saw 28% year-over-year revenue growth. But here's the number you really need to see. Their orders shot up an incredible 60%. That signals a massive, massive acceleration in future demand. The pipeline is packed. On top of all that growth, it's an incredibly profitable business. A return on equity of nearly 39% tells you that management is just exceptionally good at turning every dollar of shareholder capital into pure profit. Okay, let's break this down real quick. The forward PE is sitting at 44.5. Now, look, that's not cheap, I get it. But you could argue it's totally justified by the insane growth we just talked about. The ROE, as we saw, is a stellar 38.9%. Their balance sheet is solid, with a debt-to-equity ratio under 1, which is great to see, and they are just gushing cash, with an estimated free cash flow per share around $3.90. This is the exact profile of a healthy, high-growth industry leader. All right, go ahead and mark your calendars for this one. The next earnings call is set for February 25th, 2026. This is going to be a huge day for investors to see if that incredible order growth is still on the same trajectory. So the story is powerful, the fundamentals look rock solid, but what does Wall Street think? Let's dig into why the so-called smart money is placing some enormous bets on Vertiv's future.
Okay, just look at this number. It's pretty incredible. A massive 89.9% of Vertiv stock is owned by large institutions. We are talking about the world's biggest investment funds, the biggest asset managers. They own the vast majority of this company.
And get this, they're still buying more. Financial titans like BlackRock and Vanguard recently scooped up over 102 million more shares for their positions. I mean, when the biggest players in the game are accumulating a stock this aggressively, that is a massive vote of confidence. Now, a real quick look at the technicals shows a pretty healthy picture. The stock is in a clear uptrend. It's trading above its key support levels, but it's not yet overbought or overextended. The RSI is neutral, which suggests it's in a strong position with plenty of room to potentially run higher.
Okay, so let's be real. No investment is ever a sure thing. So we've got to take a balanced, forward-looking view here. Where could this stock actually go by 2030? And what are the crucial risks that you absolutely need to keep on your radar?
While analysts are extremely bullish on this one, the 3-year price target suggests a potential move to around $282. But the 5-year bull case, that's where things get really exciting. We're talking a potential price target of $677. In a scenario like that, Vertiv's market cap could soar past $250 billion by 2030.
So let's put it all together. The bull case is crystal clear. They are dominating a critical niche in the AI market. They have a massive backlog of orders, and the biggest institutions in the world are heavily invested. But, and this is important, you have to be aware of the risks. First, that high valuation means the stock could get hit if AI spending slows down. Second, they do have tough competition from industrial giants like Eaton and Schneider. And finally, broader economic headwinds or tariffs could always throw a wrench in the works.
And of course, it's so important to remember this is for informational purposes only. It is not financial advice. You should always do your own thorough research before you make any investment decisions. If you got some value from this breakdown today, it would mean a lot if you'd help support the channel by hitting that subscribe button and giving this a like. We're here to help you learn about these opportunities before you put your hard-earned money to work.
And hey, one last thing before you go. If there's a specific company, any ticker symbol, that you want us to break down next, just drop it in the comments below. We read every single one. Thanks for watching.